Hey Parallax traders, this is Imri and I'm back with another educational video this time. This is not a market update, this is an educational video, and it is all about how do we trade using the wave principle. And I can't emphasize this point enough. If you make the decision to become a student of the wave principle, what you are in fact learning is not a trading strategy. It is not a trading methodology. What you are learning is what I refer to as the unified theory of market behavior. What you're going to learn is why markets move the way they do. And as a result of being a student of the wave principle, you're going to be able to accurately forecast markets. And this is where the rubber meets the road and things get really, really exciting. Okay, so you can deploy trading strategies in accordance with the wave principle, leveraging the rules and guidelines of the wave principle, but the wave principle itself is not a trading strategy, all right? But you can trade in an incredibly powerful manner utilizing Elliott wave. So the most common question I get from traders that are making the jump from being excellent wave analysts and they want to become excellent traders, that the most common question I get is, well, I can forecast the market, you know, like this stock, this currency pair, this commodity, whatever, it's going to go up or down. I know that much. But how do I make money from that forecast? Where do I enter? Where do I place my stop? And how do I know when it's time to go in and be aggressive? Or when do I know when it's time to be patient? Okay, so the answer to that question is by deploying this 4-step method, all right? I go through this checklist. It's not a long checklist. It's just 4 items. I go through this checklist in order on every single trade I take, all right? I don't care if I'm scalping. I don't care if I'm looking at a multi-year trend in a stock or commodity or currency pair or whatever. I deploy this 4-step checklist. It is scalable regardless of what you're trading, the time frame, the position size, etc. So number one, I have to ask myself this very important question. What is the trend? And by the way, if I don't have an answer to any of these questions, in order, let's say I can answer question number 1, 2 correctly, but I can't answer 3, I cannot proceed to number 4, all right? So number 1, what is the trend? Number 2, what is the pattern? What does the market structure look like? 3, what is the momentum signature of the market that I'm looking to trade? And 4, finally, if I can pass the first 3 questions on this test, then number 4 is the test. What is my time frame entry, stop, and target? And this is where people mess up, all right? I'm making up the statistic. Don't be mad, all right? There's lies, damn lies, and statistics. This falls in the latter category. Something like 99% of traders look at the test first. They want to know, what's my time frame? What's my entry? Where's my stop? What's my target? They want the answers to those questions first. They put the cart entirely before the horse, right? It's completely ass backwards, all right? The test is the last thing that I'm looking at. Is this the last thing I'm considering? Okay, so I can say that the trend is down. I can say that the pattern or structure is a zigzag, a flat, a triangle, whatever. And then if the momentum signature doesn't support my assessment of this market structure and of the trend analysis, I can't proceed to the trend. Likewise, if I've identified the trend, but I'm unsure of the pattern and market structure, I can't proceed to the momentum, which means I can't proceed to test. Okay, so it's very, very important that you take each and every single one of these questions into consideration in the order that I've outlined here. Now, we're going to go through some charts. I'm not cherry picking here. I'm not Monday morning quarterbacking this, as Andy Krieger would call it. I am walking you through price charts that I have labeled, or Robert has labeled, or Zerace has shared with our Parallax community on Discord. Okay? If you don't believe me, you can come over to our Discord, ask me. I'll show you the screenshots. Okay, I just want to get that out of the way. I will never, ever give you a trading lesson on a market that I have not myself traded or forecasted in the past. Okay, anyway, getting that out of the way. So we're taking a look at gold here. Now, I've been calling for this 4th wave in gold to be complete and putting in a top for quite some time. I say quite some time because gold started rallying in mid-May and didn't top out in wave 4 till mid-June. And then we got a sharp drop, long-term, a fairly lengthy little wave 2 here, and then a drop in wave 3 of a larger degree 5th wave. Okay, so just getting that background context out of the way. Let's go through the 4 items on the pre-flight checklist. Number 1, what is the trend? Well, if I'm tracking a 4th wave, the trend is to the downside. Pretty clear, because I'm expecting a 5th wave. So this 4th wave is ultimately a counter trend correction. Question number 2, what is the pattern or structure? Well, this 4th wave has taken the shape of a zigzag. It's a zigzag. Zigzags are what Elioticians call a 5-3-5 pattern, all right? And we label a zigzag using letters ABC. This is not going to be a video teaching the zigzag pattern, so I'm just going to go ahead and label the zigzag. So wave A took the form of a standard 5-wave impulse. Wave B took the shape of a flat. Wave C took the shape of a standard 5-wave impulse. Okay, cool. So the next question is, what is the momentum signature? Now, to assess momentum, I recommend using the time frame that suits the corrective pattern the best. And that sounds like a highly qualitative statement, all right? So I'm going to try and make this statement a little more quantitative. One simple way that I pick the right time frame to assess momentum on is the time frame where the corrective pattern fills up the screen, okay? So the 4-hour chart was a little bit too high of a time frame, all right? The corrective pattern didn't fill up the entire size of the chart, the entire length of my screen. The 1-hour time frame looks like it's pretty good here. I get it. Obviously, people have different size screens, okay? So this is a topic I can cover more in depth on our Discord community, but it's just a general rule of thumb. Pick the time frame that fills up your screen. Look to assess momentum on that time frame. Okay, so what I'm looking at is first of all, I'm looking for divergence. I'm looking for divergence in the zigzag pattern itself. So I do have that. I have divergence here. So I can see that this is the B wave high of the larger degree B wave flat of this zigzag, and RSI was extremely overbought here. And as wave C of the zigzag unfolded, RSI again hit an overbought condition, but we still have bearish divergence, right? So that gives me a lot more confidence that momentum is on my side. The second momentum indicator I like to look at is the MACD. Well, let's see what the MACD did. The MACD started to turn down and went negative once more as the C wave completed. So I can answer the question number 3 on my checklist, which is, what was momentum? Okay, what was momentum? The momentum is bearish, which supports my overall assessment of the market structure and of the larger underlying trend. Okay, cool. Now I can move on to test. Well, my time frame, if wave 4 took a month to complete, I'm just going to go ahead and assume that wave 5 is going to take a month or longer to complete as well. All right, so wave 5 is going to have its own 5-wave subdivisions. Wave 4 only has 3-wave subdivisions. So just logically, I can expect wave 5 to take at least as long as wave 4 to complete, if not longer. My entry, well, I like to trade zigzags on a break of wave B, the extreme of wave B of the zigzag. That is one entry method I like to use. We cover other entry methods in the Parallax Masterclass. So another entry method I like to use is a candlestick pattern, all right? Here we have a very bearish engulfing candlestick followed by this little doji candlestick that formed here first. So another possible entry method you could use would be to enter on a break of the low of this bearish engulfing candlestick, right? So a couple different entry methods. Which one you take doesn't really matter to me. What matters is that you use the method that works best for your risk tolerance and your trading personality. Stop is the same regardless of the entry method. We're going to place it just a couple ticks above the high of the zigzag. And then finally, the target. Well, in this case, in the case of gold, I'm going to be looking at a target based on the relationships for wave A and C of the larger degree zigzag, of the larger degree corrective pattern that I'm tracking here, which is a flat. So if I'm looking at the relationship between waves A and C, and this seems to be a regular flat, not an expanded flat, then I can say, the scale on my TradingView chart is off by a little bit. I can see that we have a point where A equals C at around $1,660 per troy ounce in gold. So my target's a little bit further down. Now it's possible we won't reach that point of equality, and the reason for that is there's very obvious support down here. Just basic technical analysis 101, there is technical support down here, all right? So I'm gonna widen. You'll notice this, I use zones for targets quite a bit. Why is that? It's because I never take my entire profits on a trade at once. I like to get stopped out on winning trades by employing a trailing stop, all right? But my projected target range is in this zone here, okay? Roughly a $30 range in gold. Anyway, going back to the zigzag. So now, given these parameters in mind, what does my risk-reward profile look like? Well, I'm gonna take the more conservative risk-reward profile, because again, I don't wanna be cherry-picking here. And we're gonna say, all right, my risk-reward profile looks pretty darn good on this trade. It's almost 3-to-1 using the most conservative entry method. That's great. So now I go back to my 4-step checklist and I say, what's the trend? It's bearish. What's the pattern? It's a zigzag. What's the momentum signature? It supports my bearish interpretation of the overall market. And then finally, what is my test? Okay, and there you have it. I'm gonna move on to a different price chart. I've been sharing this price chart of the CRB. Now I've said in my YouTube video, I don't trade the CRB directly, right? But we can still, let's just pretend that this was a market that we could trade. Let's take a look at how we would approach this. Right, so what is the trend? Well, the larger degree trend is to the upside, but wave 5 is taking the shape of an ending diagonal. So if wave 5 is taking the shape of an ending diagonal, then I know that ending diagonals are a terminal move, and what's going to follow is a sharp reversal. Okay, 2. What is the pattern or structure? Well, I've just covered it. It's an ending diagonal, right? Traced by these blue trend lines here. What's the momentum signature? So again, how do I determine momentum? I want to be looking at the time frame where the pattern's going to fill up most of the chart. Now, the CRB chart is a little bit funky in terms of how it presents data. I'm not sure you can see it very well on my screen, but I'm changing time frames, and the visual representation doesn't really change much. That's fine. We can look at our momentum signature regardless. So exactly what I want to see, there's bearish divergence. Oops, there's bearish divergence present throughout the ending diagonal structure. Okay, as wave 5 of the ending diagonal completes, MACD turns down. So again, supporting my assessment that this is an ending diagonal and the rally here in 5 waves is terminal. So moving on to test. All right, just real quick, let's recap. Trend is to the upside, but it's going to reverse soon. 2, what is the market structure? It's an ending diagonal. 3, what's the momentum? It's bearish. Or at the very least, we can also say that bullish momentum is fading very quickly due to that bearish divergence. 4, test, time frame, entry, stop loss, and target. Okay, so what are the entry parameters for an ending diagonal? Well, we have a couple. One would be on a break of the trend line, the 2-4 trend line, which would be right here. The other more conservative entry method would be to short on a break of the wave 4 extreme, which is where I have that ray coming in at 297. Okay, what is the stop? You'd place the stop just a couple ticks above the extreme of wave 5. What's the target? Well, ending diagonals, according to the rules and guidelines of the wave principle, tend to go back to where they started, which would be the end of wave 4. So here, again, we have an excellent risk-reward ratio of over 2-to-1. Okay, if you use a more aggressive entry technique, obviously your profit factor on this trade would be even better. So there you have it. 2 markets, 2 different price charts applying the same 4-step methodology. Hope this helps. If you have any questions, let me know. And if you're not already a member of our Discord community, just ask us for an invite link. Be thrilled to have you there. See you guys in the next video.